Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 23rd of April. My name is Michelle and I'm your host for the podcast. Over the past 3 weeks, there has been some consistently elevated volatility in the market. The CBOE VIX index, which is a proxy for the US market volatility, continued to stay above 30, which is a level to indicate that the market is highly volatile and there may be sudden extreme swings. This is in stark contrast with the patterns that we see over the past 6 months when the market is undergoing an uptrend and the volatility index is mostly at below 25 levels. In the near term, we see this high level of volatility likely to remain because of reasons including 1. Companies start to report their first quarter 2025 earnings, 2. Uncertainties on global trade tensions, and 3. Weaker economic growth concerns. So, the question now is, how can we position our equity holdings to prevent sudden losses? We believe the key for now is really to ensure allocations to remain diversified across asset classes and geographies. On a sectoral perspective, we believe a barbell approach is appropriate to achieve a balanced risk-reward. On one hand, we expect continual AI developments to favor growth areas such as global technology software and communication services sectors. On the other hand, we also favor selected defensive sectors, such as overweight on the US healthcare as well as European industrial sectors. But if we zoom out to a broader asset allocation perspective, we trimmed the scale of our overweight on global equities since the start of the month, as market uncertainties implies a higher risk premium on equities. Meanwhile, we can add to the US government bonds, which is a historically defensive asset class and under the recent sell-off. On the commodities front, we remain bullish on gold. Although gold appears to be overbought now after being the best performing major asset class this year, we see any near-term correction to be opportunities to add exposures given sustained demand from emerging market central banks and gold's track record as a hedge against stagflation risk. That's all for me today. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a great day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.